Welcome, curious minds, to another deep dive. Today, we're plunging into the recent financial results of Astral Ltd. This is for the first quarter ending June 30, 2025.
Right.
Now, if you're not familiar, Astral Ltd is a company that's, well, really shaped the building material space, particularly known for their pioneering work in CPVC pipes and fittings.
That's chlorinated and polyvinyl chloride. Yeah.
Yeah.
Really durable stuff. Great for hot water plumbing, industrial uses too.
Exactly. So, our mission today, as always, is to take the official press releases, the raw financial data, the information filed with BSE Limited and the National Stock Exchange of India, script code 532830, symbol Astral Greek, and really unpack what it all means. We want to get beyond just the surface numbers, uncover the key insights, the strategic moves, and what this signals for the company.
And just a quick heads up, the board of directors actually approved these unaudited financials on August 11th, 2025, same day the press release came out. What's important here, though, is that these results include financials from a recent acquisition, Al Aziz Plastics. So direct comparisons to last year, well, they get a bit tricky.
Right, that's a key point. Apples and oranges, sort of?
A little bit, but there's still a really compelling story in these numbers, even with that context.
Okay, so how did Astral actually do this past quarter? Let's maybe zoom out first, look at the consolidated picture. Top line.
Sure.
Consolidated revenue from operations for Q1 FY26 came in at Rs. 13,612 million. Now, that compares to Rs. 13,836 million in Q1 FY25.
So a slight dip.
Yeah, not huge, but given that acquisition is now in there, what does that slight dip tell us? Is it about demand, maybe competitive pressures?
That's a great question. And while the revenue is only down slightly, the profitability story is a bit different. If we look at EBITDA.
Okay.
For Q1 FY26, it was Rs. 1,940 million. That's about 14.3% of net sales. Now compare that to last year. Rs. 2,263 million, or 16.4%, so a drop there.
Right, a margin squeeze.
Definitely. And it continues down the line. PBT, profit before tax, stood at Rs. 1,098 million, that's 8.1%, versus Rs. 1,631 million, or 11.8% last year. And PC, profit after tax, before other comprehensive income, was Rs. 792 million, or 5.8%. Last year, it was Rs. 11,195 million, 8.6%. Even cash profit saw a decline. Rs. 1,511 million, 11.1%, compared to Rs. 1,751 million, or 12.7% a year ago.
So across the board, profitability took a hit.
It really indicates that margin pressure was significant, probably points to those external factors like raw material costs we should talk about.
And for shareholders, translating that, the basic and diluted EPS, earnings per share for Q1 FY26 was Rs. 3.02. That's quite a step down from Rs. 4.48 in Q1 FY25.
Exactly, a clear impact there. And just quickly on gross profit trends, the consolidated gross profit percentage was 39.4% this quarter, Q1 FY26. Last year, it was 40.5%.
Okay.
So even at the gross level, you see that slight compression. It really underscores the margin challenges they faced.
Right. Okay, so let's try and break down where these numbers are actually coming from. Because Astral operates in, well, two main verticals, right?
That's right, two main segments.
You've got plumbing, that's pipes, fittings, water tanks, bathware, the whole lot.
Their core, really.
And then there's paints and adhesives. That includes brands like Resinova, Seal It, and also Astral Coatings, which is gem paints.
Correct.
Okay, so starting with plumbing, how did that segment do? Revenue from operations in Q1 FY26 was Rs. 9,539 million. That's a bit down from Rs. 10,132 million in Q1 FY25.
Right.
And the segment EBITDA for plumbing was Rs. 1,565 million, or 16.4% of net sales. Again, down from Rs. 1,879%, or 17.9% last year. So same story here, revenue and margins both compressed.
But, and this is really crucial, while plumbing revenue and margins dipped, the actual volume of pipes sold, that stayed remarkably stable.
Oh, interesting.
Yeah, it was 56,074 metric tons in Q1 FY26, very close to the 55,810 metric tons in Q1 FY25.
But what does that imply?
Well, it suggests that despite all the price volatility, Astral is holding its ground in terms of market share, in terms of output. The challenge wasn't really demand for their main product, it seems, but more about the price they could get for it because of those raw material costs.
Right, price realization.
Exactly. And it's also worth noting they actually increased their plumbing production capacity during the quarter. Went up from about 381,957 metric tons to 387,501.
Okay, so they're still investing in capacity despite the margin pressure. That volume stability is impressive. Maybe holding or gaining share then, even if pricing was tough.
It certainly points that way.
And within plumbing, you mentioned bathware. That seemed to be a bright spot.
Yes, definitely. The bathware division saw really significant growth, 27.4% year on year. Sales hit ours 333 million compared to ours 262 million in Q1 last year.
That's strong, especially in this environment. Shows some diversification success, maybe.
Could be a positive sign within the segment for sure.
Okay, so plumbing felt the squeeze, but held volume. Let's switch gears to the other big vertical, paints and adhesives. How did that perform?
Right. So here, the revenue actually went up.
Okay.
Revenue from operations climbed to ours 4,073 million in Q1 FY26, up from ours 3,704 million last year.
So growth there.
Yeah.
But what about profitability?
Well, that's where it mirrors the overall trend. Segment EBITDA was ours 375 million, or 9.2% of net sales. That's down from ours 446 million, or 12.0% last year.
So revenue growth, but margin compression here too. How does that break down?
It's interesting when you look inside the segment. The adhesive business in India, it actually grew by a solid 9.2%, and it had a healthy EBITDA margin, around 14%.
Okay, that sounds good.
But the paint business, well, it saw huge growth, 20.7%.
Wow.
Yeah, but it came with a much, much leaner EBITDA margin, only 1.4%.
Oof, okay. That explains a lot.
Right, and then you had the adhesive business in the UK. It also grew by about 7.1%, but its net EBITDA margin was really low, 0.21%. Now, that was after accounting for Forex losses. Before Forex, it was around 5.42%.
I see. So the strong paint revenue growth came at a low margin, and the UK business got hit by Forex, pulling down the overall segment profitability despite the Indian adhesive strength.
You've got it. It shows the different moving parts within that segment.
Okay. Stepping back then, what was the bigger market picture? You mentioned raw materials.
Yeah, that seems to be the major headwind in Q1 for Astral, the whole polymer industry, really. They faced a pretty weak demand scenario overall and very volatile polymer prices.
PVC prices, specifically.
Exactly. Average PVC prices dropped roughly 14% year on year in Q1.
14%.
Yeah. And they were also down 4-5% just compared to the previous quarter, Q4. So you can imagine if you're Astral, you bought inventory at higher prices.
Right.
And now you have to sell finished goods when market prices are lower. That leads directly to inventory losses, hits your margins, hits your realization. It's a tough spot.
Definitely a challenging environment. But the press release hints that the story doesn't just end with Q1's difficulties. It sounds like things started looking up.
Yes, and this is where it gets really interesting. Despite all those Q1 challenges, the company is reporting a significant turnaround starting from July.
Okay.
It seems like stability is returning to polymer and chemical prices, and market conditions are improving.
Do we have specifics on that recovery?
We do. Concrete examples. The piping division, for instance, achieved an impressive 30% growth in volume in July 2025, comparing year on year.
30% volume growth in July. That's huge.
It is. And even the adhesive division in India, it delivered similar growth, over 30% plus, but that was in value terms, year on year.
Okay, so a strong rebound across key areas.
Wow.
That suggests maybe the Q1 pressures were more temporary.
It certainly provides a very encouraging sign, a strong bounce back.
Now, beyond the quarterly ups and downs, the release highlighted some pretty major strategic moves. These could really change Astral's long-term path.
Absolutely.
You flagged one earlier, backward integration into CPVC resin manufacturing. Tell us more about that. Why is this such a big deal?
This is potentially transformative for them. Astral's apparently been working on R&D for CPVC resin, which, as you said, is a prime raw material for them for about 3 years.
Right.
And the key thing is they've managed to achieve quality that's on par with international standards, but crucially, at a very economical manufacturing cost. That's the goal.
Okay, so control over quality and cost.
Yeah.
How are they executing this?
Well, they're acquiring 80% equity in a company called Nexlin Chem Private Limited. They're getting it basically at par value, just ours is 80,000.
80,000 rupees.
For the equity stake, yes. But the project itself, the tentative cost is around ours is 150 crore, that's 1.5 billion rupees, to build a plant capable of manufacturing 40,000 metric tons of CPVC resin annually.
And Astral's funding.
They're committing about ours 120 crore, which is their 80% share. Commercial production is planned by the second quarter of fiscal 27. The transaction itself should close in the next couple of months, and the investment will be phased over about 12 months.
So in roughly 2 years, they could be making their own key raw material.
Exactly. It drastically cuts their dependence on outside suppliers, gives them much greater control over costs, over supply chain reliability, especially important when polymer prices are bouncing around like they have been.
That sounds like a game changer, potentially.
Yeah.
Okay, what was the other strategic move? An acquisition.
Yes, the acquisition of Alaziz Plastics Private Limited. They bought 100% of the equity shares for Rs 330 million Indian rupees, and this was effective from April 1st, 2025.
Right, the one that impacts comparability. What does Alaziz do?
Their business is manufacturing fittings and accessories, specifically for distributing water, gas, electricity, and also for solar power applications.
Okay, so broadening the product range beyond just the traditional plumbing pipes.
Precisely. It signals they want to diversify, capture new market segments, maybe leverage their existing distribution network for these related products. It fits into infrastructure growth areas.
Makes sense. And financially, they seem equipped for these moves. You mentioned cash.
Yeah, their consolidated cash and bank balances stood at a pretty healthy Rs. 4,888 million Indian rupees as of June 30, 2025. So they definitely have the financial muscle to pursue these kinds of growth initiatives.
Okay, let's try to wrap this up. What's the real story here? We've seen a Q1 that had, well, some definite pressure. Top line, margins, hit by volatile raw materials, maybe weaker demand. But then we see these significant strategic plays unfolding, the backward integration, the acquisition, and importantly, those really promising signs of a sharp recovery starting in July.
Right.
It feels less like they're just trying to plug leaks from Q1 and more like they're actively building completely new, stronger pipelines for the future. Would you agree?
I think that's a great way to put it. Absolutely. And if we connect this back to the bigger picture, that move into manufacturing their own CPVC resin, that's strategically critical. It really poses a fundamental question for Astral going forward. How exactly will making a key raw material in-house, supposedly cost-effectively, and at international quality, how will that transform their competitive position, their profitability? Especially given how volatile polymer prices have been, it fundamentally alters their cost base and supply security.
It does. And maybe a final thought for you, our listener, to mull over. What potential ripple effects could this strategic shift by Astral producing its own CPVC resin have? Not just on their own business, but maybe on the wider polymer industry, the building materials sector as a whole. Something to think about.